Today was that do or die day with the CPI report coming in this morning, hotter than expected at that 4.2%. Now, we thought that maybe we'd get kind of a flat rate. Many people are potentially thinking that, hey, we should bounce. It just is happening just like last time. Hey, every time we have a correction, every time there's war and fear, we just go right back up to all-time highs. But we're seeing a different sentiment where there's extreme profit taking from the semiconductor sector, the SaaS or software sector, and then we're having obviously crypto continuously coming down, and that is pulling the overall market down. We know that they were heavily weighted in the SPY, QQQ, and also small caps today are continuing to come down because small cap companies, i.e. the IWM, they need rate cuts, right? Those small cap companies need rate cuts, and today was not the best report. So with that introduction, welcome to the channel, everybody. I appreciate you so much for clicking on this video. My name is Dr. B. Check the links down below if you'd like to support the channel any type of way. In today's video, I want to discuss what is going to finish off for this week. Is this a buy opportunity, or do we have lower, and where are those levels to where we could bounce and see some type of recovery? We don't see it just yet. I think we have another leg down, and we shall see based off the data. All right. So let's jump into what we have on the charts and also fundamentally. All right. So first of all, shout out to our community, Leverage University. We have been banking on the downside with put options. I have a video on the channel about put options. If you are not comfortable with trading options, or you're brand new to the stock market, you just happen to click on here, we'd love to support you and help you out in any type of way inside of our community. But just go watch that video first, right? That is how you can hedge against your portfolio, and also how you can make money while the market is coming down. So if you see here in the trade wins chat, we had a lot of wins today on the downside. Personally, I caught IWM, our small caps, for 100%. Meta did not catch the top tick trade on Meta, but did catch a piece of it for about 20%. This trade went well over 20%, probably 100% there. And then Apple still kind of, sitting around break even, kind of got stopped out of that. Nvidia worked out beautifully. I got stopped out of that, but we had a beautiful, beautiful day today. Shout out to all of our community members that share their wins here in the chat today. But let's jump into announcement I made today inside the community and showcase what I wanted to talk about today. All right. June in a midterm year. Okay. I talked about this midterm year. It could be shaky. It could look like we're going to the moon, right? But if this is your first year trading, if you just started trading or really paying attention to the stock market for really the last 2 years to 3 years, and this year you're like, man, I'm going to jump in, they're making so much money, right? You have to understand that a midterm year, if you've never really seen that actively in the market, 2022 was a midterm year. That was a bear market year. 2018 was President Trump's first term. That was a shaky year. We gave all the gains back from the year starting off in June and July. Okay. So this is showcasing that the average June price return for midterm years is typically down. All right. So you can see here, the average percent change is around 2%. Right? Hit rate 36.8%. And you can see here over the course of the days. So at the bottom here are the days of June. So the 1st of June starts off kind of green, and then middle of June, we start turning red, and we start turning red, and we start turning red. So that is what's happening right now. All right. So let's jump into the charts and showcase on the charts. Now, if you don't know, I'm not going to go into all the news headlines and whatnot, but President Trump right now is at war with Iran. Okay. We are in a battle of just all types of stuff going on. I'm not even going to go into detail, but we have all types of things going on with the Strait of Hormuz. We have bombs being, thrown out. We've got helicopters being, shot down. It's just a lot going on. And that's all I'll say about that. So that is also a spur of fear that is injected into the market. Now, we know that war is typically a bullish signal, right? But when we have these types of data reports, that's the thing that is throwing the market off. Is war is typically bullish, but if we have high inflation, right? If we have rate hikes like 2022 is on the table now, if we have a new Fed chair coming in with these situations going on, what would you do, right? That's a lot of uncertainty. Okay. So I'm putting all those puzzle pieces together and saying, hey, I don't think there's a bottom just yet on the market, and we could come down for the next week or so. All right. So let's jump into SPY and look here how we reacted today. Okay. So what I wanted to see today based off the CPI report is if bulls were going to step up, we wanted to see this area here around 735 hold up and start building higher. Okay. And that's probably what some people were potentially thinking if you're always bullish or you haven't switched your sentiment just yet in the short term. We are creating lower highs and you're thinking that we found a bottom just because of this green candle right here from yesterday's close. That was just another lower high to come lower, right? I talked about this daily moving average right here, the daily 50 moving average. Again, if you have not watched that moving average video on the channel, please go check that out. Okay, I've got the daily 20 standard moving average. I've got the daily 50, and then here's the 100 and 200. Okay, as long as we're above this 50, that is still technically considered bullish, all right, on the pullback. However, we have broken this trend, as you can see, not holding that 735 up, and now we're turning that into resistance. So it is headed straight for that 720 and potentially that 715. Now, if you see over here on my charts, I've got the previous month's lows marked out because that is where the sentiment will completely change if we take out all of May. All right, all of May just erased, okay, in a couple of weeks. So that is where you need to pay attention, really right in this zone, which is at 715 and 721. Okay, if we take out a new low, here is how it is. If you're a visual person in this zone, buyers need to step up quickly. Otherwise, we're just going to blast straight through there, and it is in a no man's land of a potential free fall, right? Down to the next moving average, which is down at 697 to 700. All right, that'll be our next point. And then all the way down into the 200, almost like the last correctional time. Look here, back in March. Now that happened pretty quickly, right? We rebounded and then we're giving it all the way back. Okay. So this correction right here came down into the 200. Okay. Blasted through all those moving averages, came down to the 200, reclaimed the 200. Right, based off of President Trump's, hey, the Strait of Hormuz, we're back, everything's good, a deal's coming through, but no deal has happened. Now we are in full quote unquote war with Iran right as we speak. Okay. So in that case, I am still bullish until otherwise because we have been so strong because we can flip on a dime. But the price action right now is telling me that, hey, there is no bottom just yet because of this price action here, continuing down to the next moving average. And this is where we'll assess next. Okay, cool. All right. Hopefully that helped out on SPY. If we look at the same chart on QQQ, right, I've got the May monthly open right here at 670. All right. Let me show you what that looks like. You see this May monthly candle right here. Here's June. All right. So we want to continue this run higher, and you want that May monthly candle to hold strong. You do not want the whole month of May given up, right? Ideally, otherwise we are coming back down into these next moving averages, which will be back down into this previous all-time high, which could be a really good interest area right here, which will right around 740 to 735. Okay. If you're a visual person, it would look something like this. Maybe we get a little sticking area right here. It holds up. Okay. And if we blast straight through that with some negative news or war or whatnot, then we could come down even further. And that's how that candle would start looking. Okay. So, Brian, what does that mean? That continues to mean put options if you're trading, but also be careful of where you are taking those put options to. Make sure you have the next level. If you don't know that, the link is down below to join us for live trading. So we are calling out these levels, level to level, so you know how to hold your trade longer and where that trade is going. Okay, IWM, same thing, same sentiment. Where is it going? Trying to take out that low of 277, 280s in sight, and then ultimately 275. If it gets below that 275, we're coming down to those equal lows of 270 and then to the next moving average there. Gold is also selling. We've got NVIDIA, right, getting underneath 200. This was a beautiful trade today that I kind of got a little faked out on personally. I called the top right here. Okay. Our community members can validate that. I was in NVIDIA puts, 205 puts right here, and it just chopped around. And I got stopped out on a little wick. And then by the time it broke trend, our community members won, right? Shout out to a couple of y'all that took this trade, but this was absolutely picturesque, perfect. off of that 207 level that it could not get through, lower high, and just went 100+% on the trade. All right. So that was a beautiful trade there. Let me get these out of the way so I can move my stuff around. Perfect. Okay. So what you're looking at for NVIDIA is now the 200 level is being pressed. Okay. 200 levels being pressed. If we get below that 200, you see how today, how the key, that daily 50 moving average was. I should have just trusted that right on that daily 50, right? Rejected right off of it, going down where to the next moving average, 194, 195 is the next level. If it blasts through that, we've got down and back into the 180s and potentially 170s, giving everything back. You can look at this if you're a pattern structure type of person. This is kind of a head and shoulders, a little bit sideways here, right? But that is a possibility. There is technically the neckline right there, okay? And we're forming, if you call it a W pattern or a head and shoulders, right? Here is that right shoulder right here that is formed, a lower high, and we're starting to accelerate, okay? Ultimately, that 195 is going to be that last line of defense before there's really nothing but room. You see, if we get below that 194, 195, we're back at 170, all right? So trade it level to level. Don't want to scare anybody, or, you know, if you're holding something, I need to sell something tomorrow. This is not to tell you, as we say on YouTube, to buy, to have any financial advice, to do something specific. I'm just giving you levels here so you can choose how you'd like to do it. If you'd like to be more active, ask questions while things are happening, be inside of our community. We'd love to have you, okay? Giving as much value here as I can on YouTube. There's the flip on Microsoft, still underneath that daily moving average. Beautiful retest on Microsoft underneath 408. It is flipping, okay? Underneath 400, Microsoft has gap fills, in my opinion, all the way down to 380, and potentially, if we get pretty nasty on the drop, all the way down here into the 350s. Okay, Meta, top-notch trade here. Here's how Microsoft would start looking. Meta broke this channel underneath 580. It is a dead zone, in my opinion, trying to retarget 530 and potentially 500. All right, so Meta, underneath that 580, there is nothing but room, as you can see, all the way down into 500 again, maybe breaking 500. All right. So this was a trade we were watching highly on Meta, and there's still more room for it to go. This is what's giving me a sentiment that we can go lower. All right. Palantir, for my people that are wondering, Palantir, this is a hanging man candle right here off of 132 underneath 130. Okay. Breaks underneath that 130 solidly, which is already doing. We're flip going down back into the 120s. Okay. Everything is associated in right now with downside. Every stock has downside pressure, has levels that are breaking, which is giving me a sentiment that, hey, if everything's moving in one wave, why fight that, right? I don't see a bottom. I don't see anything that's super, super strong right now other than the rotational sectors. Let's jump into that and finish off this video here. Okay. McDonald's. Okay, McDonald's right now is starting to break a little bit of trend. If you're not familiar with McDonald's, McDonald's is kind of separate from the S&P and also QQQ as far as the reaction from those markets. It is a safety play. It is a rotational play of safety. So as this market is coming down, what is McDonald's doing? It's starting to build strength. Okay, so watch out for McDonald's building strength off this 280, breaks above that 286. You're targeting 300. All right. Walmart, same thing. Okay, you see Walmart building strength. Okay, nice hammer candle right off that 118, trying to fill that gap back up into the 130s. Watch out for that. Back to the upside, rotational stock. All right. In my opinion, even Starbucks. Right, Starbucks is now reacting positively back to the upside, right, in a higher low formation off of that 95, higher low, higher low, higher low. That's on a weekly time frame, holding up previous support, resistance there, now acting as support, going higher. All right. So there's a lot of these out there because what's been ruling the market? SaaS companies and software, the AI run, semiconductors, and major tech companies. And when those rotate and come down, that money is either going to go into cash or you need to find where that money's rotating into. Okay. Healthcare, some of retail right now, safety stocks, a lot of the Dow Jones stocks. If we look at Home Depot, one more. Okay. So it does not mean don't pick up, right, the dips of these companies. But if you're looking for somewhere to park your money in between, or you just want a little bit of safety, there's the recommendation on the channel. Okay. Not a suggestion for you to do anything, just a recommendation. Look at this Home Depot here coming off of that 286, reclaiming 300, starting to build and holding strength there. All right. Cool. All right. Thank y'all so much. I appreciate you. If this brought you any type of value, we'll make another video before the SpaceX IPO. I know a lot of people want that. There may be videos already out on the YouTube streets about it. I will make one here on the channel about how that typically goes. If you're new to that, a lot of people are pouring money. It's a big liquidity event, right? And I'll be very careful with that right off the bat, okay? Unless you have a strategic plan and you've played with IPOs before, all right? So thank y'all so much. Until next time, make sure to check out what we have going on inside of Leverage University. Okay, you can click the link down below, or you can type in brianmceldery.com/Leverage University right there, and it will take you to my personal website where I have all my media, store, podcasts, merch, contact information, the other things that I personally do as far as coaching and mentorship. And this is just the Leverage University piece. So would love to have you inside as far as the trading side. But if you want to check out who I am, what I've done over these last 10 years of full-time entrepreneurship, trading for around 7 to 8, then we'd love to have you inside. All right. Thank y'all so much per usual. Until next time, peace, love, and blessings.